Retirement Lifestyle Show is back with another episode. I'm your co-host, Adrian Nicholson, and I'm joined by my fellow co-host, Roshan Langanis. Today's topic is going to be about a conference Roshan's been to, so I'm really looking forward to it. Hopefully we're going to learn some great things, and Roshan, you can take it away. And the first thing I normally like to start with conferences was I hope the travel getting there was okay.
Was not difficult at all. Heading from the DC metro area up to New York, it's pretty easy with the train. But thanks for asking. Yeah, this was the Value Invest New York conference um, that was held on March 19th, 2026. The way that it works is you attend this conference, and they had two keynote speakers, Mario Gabelli of Gabelli Asset Management Company and John Rogers Jr. of Ariel Investments, and they both got 40 minutes to really speak and question and answer sessions, 45 minutes. But the rest of the day, there were just investors speaking and sharing what they thought were good investment ideas. So I'm going to go through some of what was discussed there and just love to share it with you, discuss it with you, Adrian, and for the listeners as well. Also, feel free to send us any questions or thoughts that you have along the way. Now, we will be talking about a lot of different stocks today. And as we always do, we'll just share the disclosure. This is not investment advice. We're not recommending you buy any of these things. Any of these things that are discussed, we're not recommending them at all. As I always say, this is just to help you in your process, and these are just ideas other investors had. Now, the first one was not necessarily about a specific idea, but it was Cole Smead from Smead Capital Management, and he was there to discuss all this CapEx. The title of his presentation was Manias in American CapEx Cycles. And he compared what's going on with the AI data center space, with the U.S. shale, and that's in of the 2000 timeframe, telecom and expansion in the early 2000s, as well as the railroads in the 1880s. And so he was comparing those areas. For people that follow the markets, there's been a lot of talk about the hyperscalers and how much they're spending on CapEx right now. And CapEx is capital expenditures. So how much these companies are spending to grow or investing in the future to really try to be the leader in the AI space. And he was there discussing his thoughts on it and his research. And he is definitely concerned about what's being spent there. And he named a couple things that really stood out for me on the presentation. First is that he had said when capital expenditures are 1% of GDP, that tends to be a signal or a sign. He said, now he didn't say anything specific, things aren't going to crash or anything like that, but just that's an interesting number. And right now we're at 1.2% of GDP is being spent on CapEx for the AI infrastructure space. Now, during U.S. shale and during telecom, it was in this similar neighborhood. Telecom was 1.18, shale was 0.92%. The railroads were significantly higher. That was 6%. But you were going back to the 1880s, so significantly smaller economy then. So the most interesting thing to me from his statement overall, though, was that eventually the technology gets adopted. So whether it's, and we're talking about AI right now, but it's done at a cheaper price, that cheaper price means the CapEx does not have the return on investment that was initially anticipated. And to me, that statement, just looking at what's going on right now with AI and all the different companies trying to be the leader in that space, the question is, will the leader then be the leader, just they didn't get the return on investment they wanted or expected along the way?
Okay, yeah, that is really interesting. I mean, I got to imagine, you probably heard a lot about like AI, what's going on. And for what you just brought up with the first presentation. You're talking about all the spending going in there and how it just relates to the GDP numbers that are coming out. Just makes sense because a lot of money is just flowing through that area. So it's definitely just a very interesting topic. Do you feel like you get some type of like edge to other investor or some type of like advantage when you actually go to these conference and you hear people that are sort of experts in these fields like talk about it? Do they like share like presentations, some data that's, harder to find or not readily available to the public? Because I guess it's very different than when you're back here, it's really just articles, videos online, white papers, all that, so to speak.
Yeah, I mean, I look at this and my goal with this is, can I find one investment idea that profits for my clients greater than all the costs? And I think that's a relatively low bar, and I think we should find something. So I definitely think this was worthwhile. They're all presenting and sharing their background research. So even if you can get the presentations, which I will request from some of these presenters, I have not yet, but even if you can get the presentation, it's not the same as seeing the person describe it and then being able to ask them follow-up questions. So I
Yeah,
definitely
that's
find
awesome.
value in going, and it is a lot deeper in the research and the questions that we can ask to get further detail than something that can be done, at least online. So I find
Okay,
it to
yeah. And
be
were you able to ask any
very
questions to this
worthwhile.
presentation on AI? I know, like in the past, it's definitely really interesting in conferences when there's a speaker presenting something, and then someone in the crowd is like, what, I disagree with that, or they ask a lot of questions, and they just a little bit of a banter going back and forth. That definitely spices it up and definitely makes it very interesting and personable. Do you see anything like that, or do you ask any questions that were kind of on your mind during this?
I did ask questions to get deeper information on some of these investment ideas that they presented, but there was no combative real back and forth at all. There were definitely questions asked, but nothing else. I'm trying to think of one question and answer session where I definitely wouldn't call it combative. It was really comparing one idea versus another.
Yeah,
But yeah, and when I say it's worthwhile, Adrian, I think you and I have discussed this before. I don't think I've shared this on the podcast. I absolutely hate going anywhere. So getting me to go up to New York, stay there for a couple days, and to attend a conference, it's definitely something where I expect there to be a multiple of value in terms of not only the cost that I mentioned earlier, making at least the cost, but I think multiples of it, but also just the time that it takes, right,
yeah. I
to head up
mean, that
there,
makes
head back.
sense. I mean, I definitely was surprised when you said you took the train up. Was that just the most cost efficient way to go, or I mean, you got options. You can fly, drive, take a train. Did you like run your analysis? You find like the best way to get there and the cheapest place to stay, or how was that process
Yes,
this
I
time?
did both. As you know, I do. I did both, and the trade was definitely the most efficient from a cost, timing, and everything perspective with the times. And once you take the train up to New York, it drops you off at Penn Station, and the conference and the hotel wasn't too far away, so I was able to. It was
Nice,
like a 15 or 20 minute walk, so it wasn't too bad. It was pretty easy.
nice, awesome.
Yeah. So now that first one, the presentation I mentioned by Cole Smead about CapEx, that was that one as well as Mario Gabelli and Roger's presentation as well. Those were the atypical ones where they weren't just here's an idea. The other ones that we'll go over, and I will touch on some of the ideas, but I'm pulling my takeaways from it as well. So the next presentation was Brian Luco from Artisan Partners, and he was presenting a Swiss aerospace firm that provides components for airplanes. And what I my takeaway from this was not necessarily that company. It is something I'll dig deeper into. I liked the idea. The research looked very good. I don't know that it fits what I look for, but what really stood out for me on this is that currently more than 80% of aircrafts need to be replaced within the next 20 years. In addition to that, due to GDP growth and demographic trends, that's adding additional growth to the space. So there's going to be roughly twice as or the entire fleet that's currently out there will need to be replaced within this 20-year time frame. And each airplane has over 300,000 parts. So my takeaway from this is I think there's just a huge opportunity in this space, tailwinds in terms of future growth. They also have very strong barriers to entry, right? Because of regulatory issues, because of the safety issues. Once a company is in this space, they tend to be entrenched, and it's really difficult for a competitor to come in and take their market or market share from them. So there just seems to be a phenomenal opportunity in that area in aerospace. And now my homework from this, when I take away from the conference, is maybe the stock he presented wasn't right for me, but if I start digging into this space, maybe I'll find something that fits what I typically look for.
Yeah, and that's definitely interesting. Like right away, I'm kind of telling from like this conference, there's like a lot of different industries, sectors, spaces that are talked about and presented, which is very interesting. I mean, obviously the first one, I bet our viewers and listeners could have guessed it was going to be about like AI, and then for the second one to be about like planes and aerospace and talking about that industry, it definitely gives a breadth of different options for you to look at. Maybe sometimes even areas that you wouldn't even thought of to look for in the beginning is definitely interesting. So I definitely can see how these conferences can kind of be just like a melting pot of different investment ideas, which is, is always great.
And that's exactly what it is, Adrian. That's a great way to describe it, a melting pot of different investment ideas. The common theme would be that they're all value investors in the room. And one of the presenters, Dan Bapkis from Pizena Investment Management, he just had a slide that I thought really encompasses well what a value investor looks for. And he had said the characteristics of a classic value investment is the company's business is good, their current earnings are below historical norms, they believe this is a temporary problem, and the price today is lower than it should be when compared to normalized earnings. So I think when that first presentation being about AI was, I think what you see from the value investor's perspective is really just be careful there. What I took away from there, and then this next one in aerospace, it's just that's the common theme is this looks like a good value opportunity. Like the stock he mentioned, the company he mentioned was recently divested from all other businesses, were focused on what they're doing, trading below multiples of competitors in the space.
Yeah, I mean, that is interesting. It's like also seeing how people like value and analyze different companies as well, where everybody has like their own ways to like vet a company, their own indicators they look at, their own fundamentals, sometimes even technicals. So just hearing what other people use could be a way for you to evaluate another company. So that's definitely a cool way to look at it.
Yeah, I was particularly interested in the valuation methodologies that some people were using, just because there's so many different methods you could use in each situation, so many different assumptions you can put in. So it was nice to see the different thought processes and value. And just going back to this aerospace idea, as I said, that the company might not be the same that I eventually, if I do find one in the space, but what if I do find something, I would credit, Brian Luco at Artisan Partners for pushing me towards the space, right, to look for the opportunities there.
So I guess one other question that does arrive here is these people that are presenting on these like companies or these like spaces, like are these people that already like own shares in these companies or in these spaces or like work for them previously? Like what's kind of like their background? Because there can sometimes be like a conflict of interest as well that maybe our viewers and listeners are thinking, because that's something that definitely comes up when they go to like certain conferences or seminars and stuff like that.
Yeah, well, so these are all investment professionals that are typically, we didn't ask them, do you own this? But I'm sure they did when they were sharing the ideas. Some people did share that they owned. One of them shared that they had someone else in their firm was on the board of a company that they were pitching,
Okay.
but it really is just assumed that they own it already. So they're sharing their research and analysis that help determine them making the purchase.
Yeah, because I just think about it from like just like the other standpoint of like publicly traded companies, or you just hear like management or like buying back stock or invested in it, just have conviction positions as well. That's also something too that, you know, people just think about and I want to talk about. But that's definitely interesting to hear.
Yeah, and I don't leave this conference and just buy something that was talked about, right? I leave this conference similar to, as I keep saying on our podcast, is they help me with the research and analysis that I would do and putting a company on my radar that may not have been there. And then now that it is there, I've got to go through and narrow down the ideas and figure out which ones, if any, I'd want to research. Now, the ones that didn't seem right for me right off the top, I didn't include. But from the ones that I put on the list, I've got 19 different companies that I would potentially analyze that weren't necessarily on my research list before. Although of those 19, I'd probably say like 5 or 6 of the names are already on my list to look into, but the other,
Hmm.
13 or 14 were not.
Well, that's like interesting. That's a lot right there off the back, 19. And it could just be like a cool way if like, even if you find out, you know what, I'm going to wait on these investments. I'm not going to, initiate a position in any of them. Like later on down the road, whether it's like 6 months to a year, you can go back and say, okay, let's see which ones did well, which ones haven't done well. And just interesting, just from a standpoint, I mean, these people are, obviously kind of experts or done a lot of analysis on these companies in these fields. So you got to imagine like the up to bat ratio on how many are good and how many are bad. It should favor more of the good, but it also depends on the what the economy does, what type of market environment it does, outside factors that affect these companies. So that's also just makes it even tougher to find the right ones or in the timing
Yeah,
aspect of it.
it definitely does. But what the advantage of going to this conference is versus just Adrian, as you mentioned, going online and doing the research, is that these firms, because they're a value conference, that's the style of investment I typically lean towards. Not exclusively, but I'd say I slightly definitely favor value investing. So I know the ideas I'm going to hear will more than likely fit the profile of what I look for because it's that kind of conference.
Got it.
And I do tend to learn stuff from every presentation, even if it is a company that doesn't make sense for me, like the process that they go through or the analysis. I can learn something from that as well. Continuing on, next speaker and as I said, I'm not sharing everyone. It's just a few and a few points that stood out for me. The next speaker was Ned Reeves with Juniper Investment Company. What their presentation, Adrian, you asked about any disclosures and things they own. Well, they own the company that they spoke about, and it sounded like they've owned it for a little while. At least the stock has definitely gone up. As I always have been saying throughout this is not investment advice. This is just sharing the information. Theirs was Lincoln Educational Services Corporation, or if you've seen their commercials on TV, like Lincoln Tech, that's what they own. It's the school. A couple things that really stood out for me on this one was one, there's a huge skilled worker shortage in the United States. It's 22 to 1. Annually, 584,200 jobs available for skilled workers, and only 26,600 of those roles are getting filled. The other thing that they mentioned is the AI revolution is accelerating the trend of people going into trades instead of college. So like right now, 94% of people that, and I don't have the source of their poll on this, but 94% of people said that a trade school education is worth the tuition, while only 51% of people say that a 4-year college education is worth the tuition. So they did go a little deeper in that, saying that this focus on college, student loans, et cetera, that really only goes back a couple generations, and they're finding that it just didn't work for some people, right? Whereas the technical degrees can work for some people. Now, as you said earlier, Adrian, asking about what they're invested in, is they said they still see some upside, but they've made a lot of money, and that stock has really gone up. So as I'd mentioned earlier, it's not just looking for investment ideas or investing in what these people present, but it's just getting this data to try to find other opportunities. So for me, this shortage of skilled workers in the United States, and I'm not saying I won't invest in their idea. I'm not saying I will. I need to do the homework on it, but the stock has gone up a lot in the last this year. It's up 70% almost, and the last 1 year it's up 157%, trading at a fairly high multiple. However, there's a huge opportunity for growth and expansion, right? So that's the way I would analyze this company, right? Is what level of growth and expand with the expansion they have, and with what their plans are, do I think they're worth this valuation, this price? Because it is expensive right now. From a PE perspective, the forward PE is at 57 times earnings. So yeah, just it's like tech type numbers, right? So I don't know, but it just underscores for me what I shared earlier. Not necessarily going to leave with that idea, let's just like the aerospace, but it'll give me some areas to look at.
Yeah, it's definitely interesting. Just like you said, they're already starting to see the growth, and I always like when they kind of give like a little like story or background into it on the thesis on why they're looking into it, why there could be an opportunity. I mean, one of the things that you mentioned was how people are starting to, in an essence, really look for jobs that can't be replaced by like AI. I mean, that's the common thing that you're hearing right now, going to a certain skill or subfield that won't really get impacted, where your career or your skill set will be in like high demand. So that's definitely something that I think could be trending. We'll see to what degree, but it also shows how like when they are making these presentations, sometimes you're already seeing it, unfold, but it's also just something that you have to look more into to see if that's something that will still has more upside to it.
Yes, yeah, and that's where I wouldn't, looking at your question earlier about comparing going versus seeing things online, right? Or or really doing my own research. This is just a name that I wouldn't have looked at based on the numbers, right? And now I'll look into it deeper. And once again, I'm still skeptical whether I do anything about this one, but this knowledge may help me find something else, right? It's showing me, just like the aerospace, maybe there's another opportunity with skilled workers there, because there's a huge shortage there, right? As they said, 22 to 1. Maybe there's something else or another firm in that space that could be worthwhile for me if
Yeah.
this one isn't.
And another idea too, I mean, this goes back to what we already talked about in the podcast. It just gets you interested looking at a certain company or field. And it's something that you could also do is just look at who else are like their competitors too. Because again, that kind of like story background that they give, you know, not only benefits them, but also who they compete with as well. Versus the aerospace one, you really talked about how there are probably very few competitors in there, and they're really just fighting for market share. But this other one that you mentioned too, there could be a lot more competitors out there trying to capitalize on the same thing. So that could give you a number of different investments to also look into. If maybe one of your indicators or one of your valuation metrics don't really favor this company, maybe it could favor their competitors, or they're doing something differently. It's like another way to generate more ideas.
Yeah, and when you mentioned with the aerospace, and I talked about limited competitors, yes, for the component, but remember there were 300,000 parts per airplane. So maybe this one supplier they mentioned won't fit, but there's 299,999 other parts that I can look at potential providers for in that space. The next presentation was by Christy Siegel Malbon of Patient Capital Management, and she reviewed names that you likely have heard of, and you mentioned a moment ago, Adrian, talking about some of the stories of the background. Well, one of theirs was Expedia, and once again, not recommending it. Please do your own homework. But their thoughts were that Expedia was down because of AI disruption, and that the AI disruption case, they believe, is overdone, and that because of that, they think Expedia is an opportunity. Now, just like a moment ago, I shared what Lincoln has done. Let's look at Expedia and what their price has done this year. So it's down 17% year to date. Although it is up, if you look at the last 12 months, still up 32%. But I talked about Lincoln and their valuation. Well, Expedia is at 12.29 times forward earnings, and the numbers are more compelling. So as I look through these different companies, I mentioned that there were about 19 names, about 13 that weren't already on my list. Well, that's how I'll figure out what to look at in what order. One, what you mentioned, Adrian, is the story behind it and how good an opportunity I think it is. And then two would be just some of these numbers. And then I'll look at where do I think my time is well spent, what appears to be the best opportunity. The other thing you mentioned earlier, and I said this as well, about how they share their valuation. Well, with Patient Capital Management, they did two valuation methods for the companies they presented. With Expedia, they did a discounted cash flow, and then they did the sum of the parts valuation. And in both cases, they see an opportunity here. And they presented that kind of breakdown of charts and stories with all of the names they went over. They presented a couple more. What I really wanted to share here, though, was just the different valuation methods and how you can use them. And you can use multiple, right? Depending on the scenario, you might want to favor one towards the other, but you can use multiple valuation methods to give you an idea of what the opportunity really looks like.
Yeah, and like you mentioned before, there's so many different ones out there that you kind of just have to pick and choose or which ones work best for you. But it's definitely a good way to see if any of these valuation metrics could work just going forward.
Yes, and what you'd want to use, and that's a question too that being in person I'm able to ask. Right, if I have a question on there, which I actually did with the next person, is Tectonic Investors. The presenter's name is Jeff Everett, and the title's Profits from Independence. And the company he presented was MP Materials, and his whole concept, his whole process on this was starting with, well, if one thing breaks, then we can't have a bunch of other things. And he thinks the most vital thing out there are rare earth magnets, because they're used in cars for the EV drivetrain. They're used in defense for precision guidance failure. They're used in industrial automation for, it says, servo motor install, physical AI, and high density storage and cooling, all those things. And, with the precision guidance, I use the term failure, all these things would fail if we don't have the rare earth magnets. And the company he mentioned, once again, advice, but was MP Materials. And they got a lot of press last year with the government putting investing in them and giving them a contract to guarantee that they'll purchase a certain amount at a certain price of rare earth minerals from them. And so they had a valuation number they gave, and they didn't really talk about the methodology. Actually, they kept referencing how they thought it was a good investment, and that in addition to the federal government, they've got deals with Apple and GM, and the biggest risk they felt was execution risk, because the deals that they have with these companies, well, the facility to provide the government with what they want, provide Apple, these facilities aren't fully built. So they thought the risk was primarily execution. And so I had went up to them and asked them, well, a company like MP Materials, they're not making money right now, and or they will this year, but they're trading at 200 times earnings. The stock's doubled in the last year, hasn't done much year to date, up about 4.5%, but it's doubled in the last year. And because they haven't made money in the past, their profitability numbers just don't look good. So I'd asked him, well, how do you value it? And his response was they just took the government's floor, the minimum they would buy at the minimum price. And they had said, well, if they were to meet this contract, how much would MP Materials be worth? And that's how they valued it, which to me sounds reasonable. It sounds like conservative, but going back to the original statement that Jeff made from Tectonic Investors is that the risk is operational because we can use those numbers, those minimum numbers, and feel conservative, but they still have to deliver in order to get that revenue from the government. And that's where um, I think for me, with something like this, I'd have to feel comfortable that I thought they could deliver. And what would make me feel comfortable in that is researching management, right? Learning more about management and saying, okay, do I think management could execute on this? And if no matter how good the idea is, if they can't execute on it, it's not going to work, right? Or at least I wouldn't feel comfortable investing in it if I didn't think they could execute. As I'm going through this, I'm just like am sharing what I view as my homework or what I need to do now after the conference. And as when we talked about the aerospace, it was more about now I've got to find are there other opportunities in that aerospace that more fit the profile I was looking for. And with this one, it would be what are my thoughts on management and their ability to execute. And if I can't say yes, I think they can execute on it and feel fairly confident with that, well then I'd have to just pass on this and move on to the next one. And it
Yeah.
might be a great investment that does well and makes money, but if I'm not comfortable with it, I wouldn't want to invest in it.
Yeah, and I guess the only thing I'd add to that for our viewers and listeners, it just kind of seems like when you first start like researching a certain like investment or a stock, it's very black and white, so to speak, where you're doing like your surface level research, looking at its like fundamentals, its chart, just some basic like information on like a company. And this conference that you're going to, it really just adds like a lot of color to it, where they tell you like the story, the background, some information that they think is important, because again, with these companies, there's just a plethora of just information that you can just sort of get lost in the weeds on, where these people are trying to say, hey, this is maybe the thing that you should really focus on when you're looking at these companies. So there's a lot of stuff that you can look at that is very company specific. And then the second part to it is just like the backdrop and the kind of like the macro level that really just impacts a lot of companies out there. I mean, yes, there are a lot of companies out there that are very independent. No matter what goes on, they'll be fine. They can still make money, hit those numbers that they're trying to achieve. But again, I think you went to this conference at a very interesting time with all the volatility going on in the market, especially what we talked about in our last podcast, that can really shake up these companies, whether you're going to see who the winners and the losers are very quickly based on, everything that's going on with the economy and the market.
Yeah, and I'll go over one last speaker, and then you and I can just review this a little bit further. But this last speaker was definitely impacted with her ideas based on what is going on right now. So the speaker was Jennifer Wallace with Summit Street Capital Management, and her title was "Value Investing in the Age of AI: Revenge of the Old Economy." And what she was initially going to present was CF Industries, and CF Industries provide fertilizer. They produce, and let me get this right, ammonia, not fertilizer. And that's one of the products, I believe it could be a nitrogen product such as urea ammonium, ammonium nitrate, diesel exhaust fluid, etc. The reason it was impacted is because they're in the United States, they're using natural gas in their production. Well, once Iran bombed Qatar's natural gas facilities, CF Industries stock went way up, and it's up 31% in the last month. So this was her original investment that she was going to pitch, her original company, and she still sees opportunity, but having gone up 31% so quickly, the opportunity is not as good as it was, when she first shared with the team that that's what she was going to do, the team that organizes the conference. The one she ended up presenting more in depth because of what happened with CF Industries was a jewelry company, Signet Jewelers. And what she saw there, or the opportunity she sees there, are valuations look good, and they think that cash flows are looking good. And Signet Jewelers owns Jared, K Jewelers, Zales, And part of what caused their stock price to go down was people being concerned about, are people spending discretionary income, and the issue of lab grown diamonds versus actual diamonds via mines. And it seems that the company has been reacting well. And actually, the day that she presented, they reported earnings, and they also had gone up significantly that day. And the stock is still up from a little bit. It went up and it pulled back a little bit, after earnings, but she still sees some good upside there. And as I've been saying, this is just to try to help you with your homework. Please do your homework and your research on there. And don't take her word for it or my reporting of the conference for it. Do your research, do your analysis, and see if this fits your portfolio or not. So, Adrian, what are your thoughts from the breakdown? I gave you the abridged version of what they shared, and actually, and only a few of I went over a lot of the presenters, but not necessarily all of them.
I mean, I definitely like how they touched on like a lot of different areas, especially like the last company that you talked about. I mean, they seem very more consumer specific. How well is the consumer doing? And that's something too where it's a little bit different from the other companies that are more business to business. But again, I think it's just a great way to look at different companies and how quickly too like the narrative can really change where some of this information that they give you know could be around for a while, companies hitting numbers, some of the things that they talked about are coming to fruition, but some of these other ones based on what's going on with like the economy, the market, and certain things that they're trying to do can change pretty much like overnight, which is something too that you have to be aware of when you look into some of these companies.
Yeah, and they're at the end of the day, they're trying to all the presenters, they're trying to find good investments, right? And not only I'm saying that as far as their attendance to the conference, but they're presenting there with their it's just what they're always doing anyway, and they're just presenting an idea, one of their many ideas at the time. So at the beginning, when you had asked, almost, what's their angle or what's their perspective? Are they with the companies? So, where they could theoretically be really touting the stock for a company they work for. They're investors. They found what they think is a good idea. Now they do own it, which you could argue could be their potential conflict of interest. They own the companies, but I don't anticipate, especially with some of these deeper value ones, that they're presenting these companies and they're going to go sell, right? And I haven't actually looked at this, but I don't think this conference moved the market, right? Them presenting at this conference really moved a stock.
Yeah, I mean, like you said, it's just a good way for you to just hear different investment ideas out there and other ways to look at and analyze different investments. I mean, that's definitely something that, you can never be really complacent on. You always got to be searching for because markets and companies are dynamic. They're always changing information, is at a forefront. We're constantly being bombarded with information, especially like on companies. So being able to look at it from a different lens or perspective or just another way to analyze it definitely can help you as an investor just grow your portfolio, be a little bit more savvy when it comes to your research.
Yeah, yes, that is definitely for sure. And I would say it does save time too, right? Because I'll go to this and I won't have to research everything I would if it was a name I hadn't heard, just because they've already done the research on certain aspects and they're sharing it with us. But once again, as I keep going back to this, you don't leave this and start buying the names, right? That's not how it works. It really is about, once we find them, then find the names, then doing the homework, researching the companies, see if they're a good fit or not, and then making a decision if they are.
Yeah, and just gives you a certain pulse on the space or sector and industry they're in. If later on down the road find like another competitor or another company similar to like that, you at least have like a starting point on that you can build off of, which you mentioned saves you a lot of time as a researcher.
Yeah. Yeah. Well, Adrian, thanks for letting me share the experience and what we went over. I hope everyone found it helpful. I hope the listeners found it helpful. And as I keep saying, this is should hopefully help you with your homework, but please do your homework, and do your research and analysis to make sure it's a good idea for you or not.
Yeah, Roshan, I definitely learned a lot. It was definitely a lot of interesting on the different companies, different sectors, and different valuation metrics that they looked at. Hope our listeners and viewers got a lot of great content. We'll definitely be back soon with another episode of the Retirement Lifestyle Show.
Schedule a conversation with Roshan, Adrian, or Eric today at retirementlifestyleshow.com. Roshan and Eric are certified financial planner practitioners. They, along with Adrian, are investment advisor representatives and serve clients across the U.S. with financial planning and investment advice through Arete Wealth. If you found this show helpful, gained knowledge, or enjoyed the time you spent with us, tell your friends and leave us a 5-star review. This will help others discover the show. To access our show notes, to download any of the tools mentioned in today's podcast, to ask us a question, or to schedule a conversation, go to retirementlifestyleshow.com. All opinions expressed by podcast hosts and guests are solely their own. While based on information they believe is reliable, neither Arete Wealth nor its affiliates warrants its completeness or accuracy, nor do their opinions reflect the opinion of Arete Wealth. This podcast is for general informational purposes only and should not be regarded as specific advice or recommendations for any individual. Before making any decisions, consult a professional. The show hosts offer investment advice through Arete Wealth Advisors, LLC, an SEC-registered investment advisor, and securities through Arete Wealth Management, LLC, member FINRA, SIPC, and NFA. Finally, our music is The Chance by Jason Shaw and Audionautics. It's part of the YouTube audio library, and it's licensed under a Creative Commons license. I am Ray Voices. Thank you for listening.